Rental income is a key source of revenue for many property owners in South Africa. However, it is subject to taxation by the South African Revenue Service, also known as SARS. This guide provides a detailed overview of rental income tax in South Africa for 2025, including tax obligations, deductions, calculations, and compliance requirements. What is rental income? Rental income refers to the income earned from leasing out a residential or commercial property. It includes payments for monthly rent, lump sum lease premiums, non-refundable deposits, and lease consideration for furniture, fixtures, or additional services. All rental income must be declared to SARS, regardless of whether it is from local or international tenants. Is rental income taxable? Yes, rental income is considered taxable in South Africa. Landlords must declare their rental earnings in their annual income tax return and pay the applicable tax based on their total taxable income. Rental income tax calculation. Rental income is taxed as part of an individual's total taxable income at progressive rates. For 2025, the tax rates for individuals are as follows. For taxable income from 1 to 237,100, tax rate is 18%. From 237,101 to 375,000, it is 26%. From 375,001 to 512,800, it is 31%. From 512,801 to 673,000, it is 36%. From 673,001 to 857,900, it is 39%. From 857,901 to 1,817,000, it is 41%. And for income above 1,817,001, the tax rate is 45%. For companies, rental income is taxed at a flat corporate tax rate of 27%. The taxable rental income is calculated as total rental income minus allowable expenses. Landlords can deduct legitimate expenses from their rental income before taxation. Some allowable deductions include maintenance and repairs, municipal costs, interest on bond, agent commission and advertising costs, insurance, security costs, and depreciation on furniture and appliances provided to tenants. Declaring rental income must be done in the ITR 12 tax return under the Local Business, Trade, and Professional Income section. Tax return deadlines for 2025 depend on how tax returns are filed. Provisional taxpayers or self-employed landlords must submit by 31st January 2026, while non-provisional taxpayers or salaried landlords must submit by 30th November 2025. Landlords earning substantial rental income may need to register as provisional taxpayers and pay tax in 2 installments in August and February. If your total taxable income, including rental income, is below ZAR 95,750 if you are under 65 years, you are not liable to pay tax. If you rent out part of your primary residence, only the rental portion is taxable, and expenses must be apportioned accordingly. Income from Airbnb and other short-term rental platforms is taxable and should be declared to SARS. Failure to declare rental income may result in penalties and fines, backdated taxes, and legal action. SARS conducts audits and matches property ownership records with tax declarations to identify undeclared rental income. To reduce rental income tax legally, keep detailed records of all rental transactions and expenses, claim all legitimate deductions, consider forming a company for rental income if multiple properties are owned, and consult a tax professional for tax-efficient strategies. Do I have to pay tax on rental income if I am unemployed? Yes, rental income is considered taxable regardless of employment status. However, if your total income, including rental income, is below the tax threshold, you may not owe any tax. What happens if I forget to declare my rental income? Failure to declare rental income can result in penalties, backdated taxes, and even legal consequences. SARS actively audits property owners to identify undeclared rental income. Can I deduct my full bond repayment as an expense? No, only the interest portion of the bond repayment is tax deductible. The capital portion is not considered an expense. How do I apportion expenses if I rent out only part of my home? You should apportion expenses based on the percentage of the property being rented out. For example, if you rent out 30% of your home, only 30% of related expenses can be deducted. Are levies and body corporate fees tax deductible? Yes. Levies and body corporate fees for sectional title properties are deductible expenses. How do I declare rental income from Airbnb? Airbnb income must be declared as rental income on your tax return. Keep records of bookings and associated expenses. Do I need to register for VAT if I earn rental income? Generally, residential rental income is exempt from VAT. However, if you rent out commercial property and earn more than R1 million per year, you must register for VAT. What proof do I need for rental income tax deductions? You need proper documentation, such as invoices, receipts, bank statements, and lease agreements, to support your deductions.